Amazon's annual Prime Day event kicks off today, running through tomorrow. Adobe Analytics saying shoppers are likely to spend about $14 billion during the two-day sale. Joining us right now is Brent Thill, tech research analyst at Jefferies. And Brent, I don't want to say that this is a sideshow for Amazon, but you make the point that you're looking for some pretty significant upside here, but you think it's going to be driven by AWS and advertising. When you look at some of the parts, what's the retail operation versus AWS and what you're seeing on Prime Video?
Good morning. Yes, to your point, AWS and advertising are the bulk of Amazon's market cap. The retail business is important, but it's a very low margin business, and investors are continuing to be focused on what's happening in the cloud advertising business. Today and tomorrow are obviously a great catalyst for the advertising business that generate incredible value to these advertisers. And then you have the Prime effect, which is if you want these deals, you want the free music and you want the video, you got to sign up. And half the US is already on Prime. So they're not at full penetration, but penetration is pretty high. So that keeps driving a recurring revenue stream, driving more advertisers to the platform, drives more data to the platform, and then helps AWS on their own side. But the bigger story, again, for us is the reacceleration in the cloud business this year. That's driven by cloud optimization ending last year and AI picking back up this year. We believe they're second to Microsoft right now. And effectively, there's two big ways to play AI in the cloud, Amazon and Microsoft. And the business, but the retail business, again, if you take the sum of the parts, roughly 70% of the value of the companies between advertising and cloud. The other portions related to retail. And again, important, but a low margin business and not what's going to drive the future of profitability at Amazon going forward.
You do, though, have a buy rating on this because of AWS and advertising, a $235 price target. That's a 12-month target?
That's correct. And that's based on the sum of the parts. We take all the Amazon businesses and then apply what we think is the right multiple for each of those businesses, depending on their peer group. And that's how we derive 235. So stock's had a good year. We continue to believe it's one of our top names, especially as we come to the age of AI. They will become a much larger player with their initiatives. They own 50% of the cloud market when you combine Google and Microsoft together. So when you have 50% of the data that's sitting inside AWS, they have the right to do magical things with that data and their clients. And again, the real question is, can they catch Microsoft? They were out ahead with the move with their co-pilots. And this is going to be a fun one to watch. We think, again, there are going to be multiple vendors that will win in the age of AI. But given that many of these big companies are storing their data there, that's going to be a huge advantage for Amazon to have one of the first looks to help their clients on the road to AI.
Brent, thank you. The one thing about retail, though, you do say that they are improving their margins there, that they have managed to do this much more profitably at this point.
They are, and they're doing it largely through logistics. They've effectively, during COVID, had this big build-out. They've had to pull back because of what's happened. So their investment pace hasn't been as great. So Amazon is in harvest mode rather than invest mode. We expect, again, further optimization inside their network. Many of the network logistic operators have said there's still excess capacity. And so as they effectively don't have to lean in as hard in this build out and they get more sales, they effectively can improve their profitability, and driven by the ad business, which is really high margin, driven by their cloud business, which is, again, a very high margin recurring business. Those businesses will help offset, again, this lower margin retail operation.